A 30-year mortgage on a $500,000 home means you will actually pay the bank $960,000. That is almost $500,000 in pure interest, money that could have made you actually wealthy if you had invested it instead. Let me paint you a picture of what the American dream actually costs, not the dream they sell you in television commercials with happy families and white picket fences. The real cost. The cost that nobody calculates until it is far too late to turn back. Imagine a young couple in Texas. Let us call them Michael and Sarah, both 30 years old, both working decent jobs. Michael makes $70,000 a year as an engineer. Sarah makes $50,000 as a marketing manager. Together they bring home about $8,000 per month after taxes. They have been renting a 2-bedroom apartment for $1,200 per month. And everyone keeps telling them the same thing. You are throwing money away. You need to buy a house, build equity, stop making your landlord rich. So they start looking. They find a beautiful 3-bedroom house in a decent suburb, listed at $500,000. They have saved $40,000 for a down payment. They are excited. They feel like they are finally making it, finally becoming adults, finally achieving the American dream. They sit down with a mortgage broker, nice guy, professional suit, confident smile. He runs the numbers. With their down payment of $40,000, they need to borrow $460,000. At 6% interest over 30 years, their monthly payment will be around $2,700, plus property tax of about $500 per month, plus homeowners insurance of $200 per month, plus homeowners association fees of $150 per month. Total monthly payment, $3,550. Michael and Sarah look at each other. It is definitely more than their current rent of $1,200, but the broker reassures them. You are building equity. You are investing in your future. In 30 years, you will own this house free and clear. It will be worth $1 million by then. You will be rich. They sign the papers. They move in. They are homeowners now. They feel proud. They post pictures on social media. Their parents are proud. Their friends are jealous. Everyone congratulates them on their wise investment. But let me show you what they actually just signed up for. Let me show you the numbers that the mortgage broker did not emphasize. The numbers that get buried in the fine print of that 200-page mortgage document that nobody actually reads. Over 30 years, they will make 360 monthly payments of $2,700. That is principal and interest only. That totals $972,000 for a loan of $460,000. That means they will pay $512,000 in pure interest to the bank over 30 years, money that builds zero equity for them, money that goes straight into the bank's profit column. But wait, it gets worse, much worse. Remember the property tax of $500 per month? That is $6,000 per year. Over 30 years, that is $180,000. Money that goes to the government, money that builds zero equity. And here's the kicker. Property tax does not stay at $500 per month. It increases every single year. By the time they own that house free and clear in 30 years, the property tax will probably be $800 or $900 per month. But let us be conservative and use the $500 figure. Homeowners insurance. $200 per month. That is $2,400 per year. Over 30 years, that is $72,000. Also building zero equity, also increasing over time. Homeowners association fees, $150 per month, $1,800 per year, $54,000 over 30 years. For what? For someone to mow the grass in the common area once a week and send you angry letters if your trash can is visible from the street. Now let us talk about maintenance. This is the cost that every first-time homeowner dramatically underestimates. The general rule in real estate is to budget 1% of the home value per year for maintenance and repairs. For a $500,000 house, that is $5,000 per year. $50,000 every 10 years. $150,000 over 30 years. What does that include? A new roof every 15 to 20 years. That is $20,000. A new heating and air conditioning system every 15 years. That is $12,000. New water heater every 10 years, that is $2,000 each time. New appliances, new flooring, new paint, plumbing repairs, electrical repairs, termite treatment, foundation repairs. The list never ends. The house is constantly demanding money from you. And these are not optional expenses. These are mandatory. The roof leaks. You have to fix it immediately or water damage will cost you $50,000 in mold remediation and structural repairs. The heating system dies in January. You have no choice but to replace it right now. No heat means frozen pipes. Frozen pipes mean burst pipes. Burst pipes mean $20,000 in emergency plumbing and water damage restoration. The air conditioning fails in August in Texas. Your family cannot live in a house that is 110 degrees inside. You are calling the heating and air conditioning company today and paying whatever they charge. Let us add it all up. Principal and interest, $972,000. Property tax, $180,000. Insurance, $72,000. Homeowners Association, $54,000. Maintenance, $150,000. Total, $1,428,000 for a house that cost $500,000. Michael and Sarah will spend almost $1.5 million to own this house. And that does not include utilities. That does not include furniture. That does not include landscaping. That does not include any upgrades or renovations they might want to do. But everyone says, look at the equity you are building. Look at the appreciation. True, let us talk about that. For the first 10 years of a 30-year mortgage at 6% interest, almost 80% of every payment goes to interest, not principal. In year one, Michael and Sarah pay approximately $27,000 in mortgage payments. Only about $6,000 of that goes toward principal. $21,000 goes to interest. They are barely building any equity at all. By year 10, they have paid about $324,000 in mortgage payments, but only about $80,000 has gone toward principal. The other $244,000, pure profit for the bank. Now let us talk about appreciation. Real estate gurus love to tell you that houses appreciate at 4 to 6% per year. Let us be optimistic and say 5% per year. After 30 years, that $500,000 house will be worth about $2,100,000. Sounds great, right? But wait, you spent $1,428,000 to own it. Your net gain is roughly $672,000 over 30 years. That is about $22,000 per year, about $1,800 per month. Now here's the question nobody asks. What if Michael and Sarah had rented instead? What if they stayed in that $1,200 per month apartment and invested the difference? Their total housing payment as homeowners is $3,550 per month. As renters, they pay $1,200. The difference is $2,350 per month. What if they invested that $2,350 every single month into a simple index fund that historically returns about 10% per year? After 30 years, that investment would be worth approximately $5,200,000. $5,200,000 compared to owning a house worth $2,100,000 that cost them $1,428,000. The difference is staggering. By choosing to rent and invest, Michael and Sarah could have ended up with over $3 million more wealth. $3 million. That is the opportunity cost of buying a house. That is what the mortgage broker never mentions. That is what the real estate industrial complex does not want you to know. But everyone says rent increases every year. True. Let us account for that. Let us say rent increases by 3% every year. After 30 years, their rent would be about $2,900 per month, still significantly less than the total cost of homeownership. And they still end up with millions more in invested wealth. Because here is what nobody tells you about owning a house. You are not free. You are trapped. That house owns you, not the other way around. You get a job offer in another city? Too bad, you have to sell the house first. And selling a house costs 6% in realtor commissions plus closing costs plus moving costs. On a $500,000 house, that is $30,000 just to get out. The housing market crashes and your house is suddenly worth less than you owe on the mortgage. You are underwater. You cannot sell. You are trapped. You lose your job. The mortgage payment does not care. Property tax does not care. The bank will foreclose on you after 90 days of missed payments. 3 missed payments, and they take everything. 30 years of payments do not matter. You miss 3, and you are out. They take the house. They auction it. They keep all the equity you built. You get nothing. This is not theoretical. This happened to millions of Americans in 2008. People who thought they were building wealth through homeownership lost everything overnight. The banks got bailed out. The homeowners got nothing. Let me tell you about a real case. A man in Florida, we will call him David. He bought a house in 2006 for $600,000. Put down $100,000. Borrowed $500,000. By 2008, the market crashed. His house was suddenly worth $350,000. He owed $500,000. He was $250,000 underwater. He had 2 choices: keep paying the mortgage on a house worth half what he owed, or walk away and destroy his credit for 7 years. He kept paying. For 10 years, he kept paying. By 2018, the market recovered. His house was finally worth what he owed. He sold it. After 12 years of payments, after paying probably $400,000 in mortgage payments, he walked away with basically nothing. 0 return on 12 years of payments. Could he have been a millionaire if he had rented a cheaper place and invested that $400,000 over 12 years? Absolutely. At 10% annual return, that $400,000 would have become over $1,100,000. But he chose the American dream instead. He chose homeownership. He chose the mortgage trap. This is the reality that nobody talks about. This is the math that real estate agents will never show you. This is the truth that the banking industry has successfully hidden behind the emotional appeal of home ownership. They have convinced an entire society that paying a landlord is somehow stupid, but paying a bank is somehow smart. They have convinced people that going into massive debt is actually an investment. They have weaponized fear of missing out. They have romanticized home ownership to the point where questioning it is almost un-American. And you cannot have freedom when you are trapped under a mortgage. When 70% of your income goes to housing costs. When you are 1 job loss away from foreclosure. When all your wealth is tied up in an illiquid asset that you cannot sell quickly without losing $30,000 in transaction costs. The bank wants you in debt. The government wants you paying property tax. The real estate industry wants you buying and selling houses every 7 years so they can collect their 6% commission over and over again. The entire system is designed to extract wealth from you and transfer it to them. Now let me show you one more calculation. The calculation that destroys the home ownership argument completely. Take that $40,000 down payment that Michael and Sarah used to buy the house. What if they had invested that $40,000 in an index fund instead of using it as a down payment? At 10% annual return, that $40,000 becomes $498,000 after 30 years. $500,000. Just from investing the down payment alone. Add the $5,200,000 from investing the monthly difference between owning and renting. Michael and Sarah could have ended up with $5,700,000 in liquid, investable wealth after 30 years of renting. Instead, they chose the mortgage. They chose to own a house worth $2,100,000 that cost them $1,428,000. Their net worth from home ownership, $672,000. The difference between renting and investing versus buying, over $5 million. $5 million. That is the true cost of the mortgage trap. That is what they are not telling you. That is the math that will never appear in a real estate seminar or a mortgage broker's presentation. And this is using conservative numbers. This assumes only a 6% mortgage rate. Many people are paying 7 or 8% now. This assumes the house appreciates at 5% per year. Many houses do not. This assumes no major financial emergencies. Most people have several over 30 years. The reality for most homeowners is even worse than this calculation suggests. So why does everyone still believe that buying a house is the smart move? Because of survivor bias. Because you only hear from the people who got lucky. The people who bought in the right market at the right time and sold at the peak. You do not hear from the millions who bought at the wrong time and lost everything. You do not hear from the people still trapped in underwater mortgages. You do not hear from the people who sacrificed their entire financial future for a house they do not even really own until payment number 360. The system is designed to make you feel like a failure if you do not own a house. It is designed to make you feel like you are throwing money away if you rent. It is designed to make you ignore the math and make an emotional decision based on what society expects of you. But the math does not lie. The math is brutal and unforgiving. And the math says that for most people, buying a house with a 30-year mortgage is a financial disaster disguised as the American dream. Michael and Sarah signed those mortgage papers 5 years ago. They are still in that house, still making those payments, still believing they made the right choice because everyone told them it was the smart thing to do. They will spend the next 25 years of their lives trapped in that cycle, working jobs they might want to leave, staying in a city they might want to escape, all because of a decision they made in their 30s based on emotion, not mathematics. This is happening right now to millions of families across America. The same story, the same trap, the same financial prison disguised as the American dream. If this video opened your eyes to something you have never considered before, hit that like button. Not for me, but because this information needs to reach more people. The real estate industry spends billions on advertising to keep you believing the mortgage myth. We are fighting back with pure math and brutal honesty. Subscribe to this channel if you want more financial truth that nobody else will tell you. No courses to sell, no hidden agenda, just real numbers and real consequences. Share this with someone who is thinking about buying a house. You might save them from the biggest financial mistake of their life.